Tesla continues its downward slide and Motor Trend reveals its car of the year. Strap yourselves in, it's time for Motor Money. Hi, I'm Motley Fool analyst Rex Moore, and welcome to another thrilling edition of Motor Money. My co-pilot on this road trip is, as always, Motley Fool senior auto analyst John Rosevear, live and in color from somewhere in the great state of Massachusetts. And John, you're no longer with a white background. You have a bookshelf behind you. And what is that, the Intelligent Investor behind you? Who's that for?
Well, you know, I do try to be an intelligent investor. Sometimes we succeed. But no, there's never anything bad about rereading Ben Graham.
Indeed. Now, our first segment of the show is, as always, headlines from around the world of the autos this week. And our first headline is from the Motley Fool and troubling times for Tesla. We have a couple of things to talk about with this company. First of all, earnings, John, and why your headline says that investors should ignore Wall Street about the stock drop after it reported earnings.
Yeah, Tesla stock has been falling hard. I mean, it reported third quarter earnings after the market closed on Tuesday, and it's basically been falling since. And the thing is, the earnings actually weren't that bad. Tesla actually beat its own guidance by a little bit, but they didn't deliver quite as many vehicles during the quarter as some analysts had expected. These were some rosy expectations. And its guidance for next quarter was, again, a little less rosy than Wall Street had hoped, and that took some of the air out of the stock price. CEO Elon Musk also probably took more air out of the stock price when he said that supplies of batteries were going to be tight for a little while, and that would keep Tesla from ramping up production as much as it might like.
So we will have more on Tesla's earnings in our Under the Hood segment coming up in just a moment. But we have a little more to talk about. Just when you thought it was safe to look at the headlines again, another Tesla Model S fire, and the stock is down again today, down 20% this month. So what are the details on this fire?
Well, on Wednesday, news broke of a fire in a Tesla that had crashed, I think in Tennessee. This is the third one we've heard about since the beginning of October.
Yeah.
You know, one is a fluke, two is an anomaly, and three starts to look like a trend. And each one of these fires has been followed by a big drop for Tesla's stock. Of course, you know, as we've talked about in the past, these high-flying stocks can be very volatile and so forth. But, you know, add that to earnings a couple days ago, and the pressure on Tesla's stock price is pretty heavy right now.
Okay, as I said, we'll have more on that in a moment, but first, another headline. And from Motor Trend. Motor Trend has revealed its car of the year for 2014, and it's great news for Cadillac as the CTS grabs the honors. John, you've got to be pumped about this, and you own a CTS. I know it's not this model, but you love the car.
Yeah, I've been very impressed with the new Cadillac, as we've talked about. Motor Trend really liked the new CTS for a lot of reasons. It's bigger than the old car. It's more nicely finished inside and out. But it's also lighter in weight than its rivals, the other big competitors in this segment. And that makes it both more fuel efficient and more fun to drive. It's more nimble. And Cadillac has done a lot with options, really allowing buyers to mix and match several good engine choices with different trim and luxury packages. That's something the German brands do, and Motor Trend really like that Cadillac is going in that direction. And they've done it all to a very competitive standard. What makes this interesting is that every year Motor Trend gathers all of the new and redesigned models that they're considering and then evaluates them. And this year, the two big guns in this class being mid-size luxury sedans, those two cars are the BMW 5 Series and the Mercedes-Benz E-Class. They were both redesigned, so they were under consideration here, as was the Infiniti Q50, another all-new entry here. And none of those cars were even finalists for the award. They weren't in the final group, Motor Trend says. So really, the CTS went head-to-head against some of the cars it was most aimed at, that it was most designed to beat, and it beat them, at least in this evaluation. It's a big plum for General Motors here.
And do you have any idea when a car wins this award, is there an X% boost in sales that these things usually see?
You know, I don't know. It is certainly advertised heavily. The manufacturers usually make a big deal out of it. Whether it actually influences a lot of sales, I don't know. I suspect it did a long time ago. I wonder how much Motor Trend's signal comes through the noise nowadays, but they take this seriously. They certainly, you know, do an in-depth evaluation, so it's certainly worth something.
And has it actually been a year since the Tesla Model S won this thing?
Yes, it has.
Time is flying by. Our final headline
Yes,
of the day from the Motley Fool again, and we're talking more earnings. And let's start with Toyota, which really just knocked it out of the park. A lot of good numbers here, John.
Rex, Toyota's earnings for the quarter were 438.4 billion yen. Everything sounds bigger in yen, doesn't it? It's great. Yeah, that's about $4.4 billion. That's huge for an automaker's quarterly earnings. And it's up 70% from what Toyota did a year ago. And what's more, they boosted their full-year guidance to 1.67 trillion yen. There are those big numbers again. But it's big in dollars, too. That's almost $17 billion. That's a huge annual profit for an automaker. And it's a 13% increase over the very rosy guidance they gave us just last quarter. Of course, Toyota is executing well, as usual. Their new models, like the Corolla, was recently launched here. It's doing well. They've got costs under good control. But what's really driving those huge profit gains is the yen. The Japanese government, Japan's central bank, they started devaluing the yen last year, which makes it worth less versus the dollar and the euro. So we've gone from around 80 yen to the dollar to close to 100. It was just under 99 when I checked earlier today. And that means that every dollar Toyota earns in the U.S. is worth more when it's converted to yen at home. And it also means the cars Toyota exports from Japan are cheaper in dollar terms. So Toyota can either keep its prices lower or have fatter profit margins, and they seem to have chosen sort of to split the difference and have both, and that's working really well for them right now.
Now, BMW also reported, presumably not in yen. What are your thoughts on their earnings?
Now, BMW reported in Europe, and BMW is a different story. BMW's third quarter earnings were actually down 3.7% from the third quarter of last year. Revenues were flat and so forth. BMW earned 1.93 billion euros last quarter. That's about $2.6 billion. So we have it going the other way here with the currency. And their sales have been good. As I said, their revenues are roughly flat, but the difference is that their costs are up. And what's going on is they're feeling some competitive heat. Both Audi and Mercedes have made it their goal to beat BMW in sales by the end of the decade. BMW is the luxury car sales leader on a global basis right now. But I think they're feeling the heat, and their costs have gone up because they're investing in a whole bunch of new models and other stuff to try and keep their sales lead going. Last quarter's big hit to earnings was apparently due in part to costs involved with getting the new electric car, the BMW i3 that we've talked about, getting that into production. That's going to start rolling out momentarily, I think, like next week or something. And they have a total of 25 new models coming between this year and next. That's across their three brands. BMW actually owns the Mini and Rolls-Royce brands as well, and they have new products coming on both sides of the shop there. BMW CEO Norbert Reithofer said that, and I quote, "We are making these investments from a position of strength, and we are making them early. This is consistent with the long-term focus of the BMW Group." So translate that. It'll crunch their earnings growth for a while, but it's probably the right move for them.
Okay, very interesting, and we'll keep an eye on that. That is all for headlines, and it is time now to shift gears. Yes, time for that segment of the show where John and I go under the hood for a closer look at some of the big issues in the auto world. And today we will take a deeper dive into Tesla's earnings. John, the stock is way down from not only the earnings, as we take a look at the chart here, but the third Model S fire. So shareholders are feeling some pain. However, the quarter really wasn't bad at all, was it?
Yeah, Rex, Tesla's quarter was actually fairly decent when you view it in context. And if you use their non-GAAP numbers, they use a little bit of non-standard accounting, which they like because it presents a more accurate picture without having to account for a bunch of stuff around their financing program. As long as they're consistent quarter to quarter, Wall Street has bought into this approach so far. But anyway, under this approach, they made $16 million. That's 12 cents a share. Wall Street had expected 11 cents. So they beat estimates. And they said last quarter that they would probably deliver a little more than 5,000 cars during the third quarter. They said Tuesday that they delivered slightly over 5,500. Including over 1,000 to Europe. So they beat their own guidance on that front, too. They didn't report production numbers, but they said that production significantly exceeded deliveries because they were filling the pipeline of vehicles going to Europe and because they made a bunch of cars for their new dealerships to have for test drives and so forth. They said demand in North America and Europe has continued to grow, and they have begun taking orders in China, where they expect to deliver the first cars to customers in the first quarter of 2014.
Well, none of that sounds bad, so by all accounts, then it seems like the company is still pretty much on track.
Yeah, all of that is good. They're on track. No big surprises. But as we said at the beginning of the show, the stock has been absolutely clobbered. I mean, it's down over 20% from where it closed, on Tuesday, right before they released the earnings report.
So the stock down. Is there anything then that, if you're a long-term investor in this company, you may be a little nervous right now, but is there really anything to worry about, at least to the way the company is executing?
Well, I still think the fires are being blown out of proportion, but if at some point the U.S. government decides to step in and investigate, that could turn into maybe not a problem, but certainly a hassle. Every fire adds a little more reason to worry on that front. It's like we said, one's a fluke and two is an eyebrow raiser, and then three, you start to say, whoa, this is a trend. As for the other stuff, really missing some analysts' kind of wishful thinking estimates about the cars delivered during the quarter is nothing that investors need to worry about. It's the kind of thing where the stock goes down and then it recovers. But the battery shortage thing is actually something that could turn out to be a little bit of a wrench in the works. It led Elon Musk to temper expectations for the fourth quarter, and that's actually putting some pressure on the stock here, which had been flying so high because everything was just so rosy. And he's saying, wait a minute, they've been ramping up production, but the problem is they can't get enough batteries to make as many cars as they want. They've got more orders than they can fulfill. So people are going to have to wait longer for their new Model S to be delivered and so forth. Tesla's batteries are supplied by Panasonic. These batteries are generally considered, I've talked to engineers at other automakers, these are the best electric car batteries that anybody has come up with so far. Tesla uses the good stuff. Some other automakers have also begun to use them. Ford uses Panasonic batteries in its plug-in hybrid. Supplies are short. Panasonic's current production lines are currently maxed out. Panasonic and Tesla announced last week that they had this new deal where Panasonic would supply almost 2 billion of these battery cells over the next 4 years. Tesla has made a commitment to this, and so now Panasonic is willing to invest in additional production. But production for that deal won't ramp up for several months yet. Of course, on the call, Tesla CEO Elon Musk was saying that maybe they need to build a huge battery factory here in the U.S. And I could totally see Tesla trying to do that. It's a very Elon Musk kind of solution. We'll just build a massive factory, But in the near term, Tesla's in a situation where the demand for the Model S is kind of outstripping their ability to get the parts they need to build it. And so they're not going to be ramping up production as sharply as they might want. And that is maybe leading some big investors to adjust their expectations. So I think the stock could, continue to have some pressure on it for a while. And it might take a while before it gets back up to where, Tesla investors would like to see it once again.
Now, don't want to put words in your mouth, but then are you saying that it's possible that the supply constraints could be somewhat of a short-term issue if Panasonic in a few months is able to ramp up production?
Yeah, I think this is a months, not years issue. But, they're saying sometime next year. I haven't pinned that down closer to that. I'm actually going to try and talk to Panasonic and see what they have to say about this. Tesla, of course, doesn't tell anything. It doesn't have to really, but so we'll see about that. But it's not going to be this quarter. It's going to be sometime in 2014 that they're going to have these new battery facilities, these new battery factory, I guess, or assembly lines at least, up and running. So we are talking about a while before the supplies here come up.
And hang with us,
but
folks.
not years.
Okay. Hang with us.
Not
We will talk more about Tesla in just a moment as we move now into our fun and final segment. And if you didn't know that we love Pardon the Interruption around here on ESPN, you certainly will after this segment because it's over-under time. I'll explain the game. Well, I don't even have to explain the game. It's pretty self-explanatory. Our first one, over-under 2070 as the year the last gasoline car will be built. Now, this comes from an ecomento.com headline that Shell has put a rough date of 2070 for the last passenger road vehicle powered by gasoline. Now, I'm going to go first here, John, and say I'll go under, actually. So that means before 2070, I think this will happen for two reasons. First, it may seem inconceivable right now that people alive today may actually see the day come when they are not making any more gasoline cars, but it's still such a long ways off. And I'm impressed with the electric car technology as well as natural gas, and I definitely won't discount hydrogen and fuel cells despite what Elon Musk says. I kind of look at what Moore's Law has meant in the electronics world. It's certainly not the same here, but I think the battery technology will get better, they'll get cheaper, they'll get lighter, they'll have more range. Natural gas, of course, is a huge power of the future. So that's one reason. Now my second reason is it's 56 years away we're talking about, and there's a darn good chance that I won't be around to eat crow in case I get this one wrong. So I'm going to throw it over to you, John. What are your thoughts on this? Over or under?
I'm going to take the under too, but I don't think it's going to be anytime soon. I do think, as you say, there are a lot of technologies being thrown up: hydrogen fuel cells, electric cars, natural gas approaches, and so forth. I think, it's entirely possible. It even seems likely from here, though who knows, that by 2030 or so, most of our cars will be mostly running on something else. But the last one that some little factory somewhere builds, Land Rovers to go out in the bush in Africa where all they have is gas stations that are 100 years old. I don't know. I think it's going to be quite a while. I think it might be one of those things where most of us are switched over by 2035, but 30 years later, there's still one factory making them, because somebody needs them somewhere in some far off distant corner of the world. But I am going to take the under on this. I don't think it's going to take that long, certainly before most of us are switched over.
Okay, and feel free to hunt us down in 2070, folks, if we got this one wrong. Next one, over under 6, and that would be the number of years until BMW loses its lead in the luxury car segment. John, to set this one up, a recent article from you says that both Daimler and Volkswagen, who were the respective corporate parents of Mercedes-Benz and Audi, have made it their goal to outsell BMW by the end of the decade. So what is your call here?
I'm going to say the under, and I'm going to say it's going to be Audi that's going to do it. Volkswagen is just on a roll. I mean, they have so much money to spend, and they are spending it on this mad global expansion drive. They want to be number one, even in global sales across their company, ahead of even Toyota and General Motors by 2018. And they are absolutely bent on this goal. Audi is huge in China. They have the number one position in China's luxury market. China's luxury market is booming. It's going to get bigger and bigger. And if they hold on to that, I mean, they've got like a third of the market. It's really amazing, the lead they've built there. All of the cool kids, meaning all of the top government bigwigs and so forth, they all show up to these meetings in black Audis. Audi is the thing. It's the hot car in China. BMW has a good position. Mercedes has a good position. Cadillac and a few others are up and coming. But Audi is the number one spot. If they hang on to that, just the momentum of that market, they will blow past BMW on a global basis, I think, and I don't think it's going to take 6 years if that holds.
Okay. Well, my call, I was tempted to go over, thinking that BMW could at least hold on for 6 years, but like you, when not one but two CEOs state that they're after to grab the market lead, then they have some kind of singular focus there. So my answer is going to be a lot less shorter, but that's the reason that I would go under as well. So our final one, over under 13, and that is the number of months until Tesla and Elon Musk deliver their first Model X crossover vehicle to an actual customer. So I'm basing this over under on company estimates that they're targeting the end of 2014 to begin deliveries. Now, again, I was tempted to go over here and say that they wouldn't actually meet that target, but I'm actually going to go under for the main reason is that even if they have trouble ramping up production like they want, Elon Musk is targeting the end of 2014, and even if he rolls out just one and delivers it, and then they have to slow production until they get enough of the synergies there in the production line, that I think that they will actually hit this target.
I think they will too, and here's why. Bringing a car to market is a really hard thing to do. It's a project with an immense number of moving parts. Even, companies that have been doing this for decades, if you go to Toyota or General Motors or whatever, this takes, even for them, with all the resources they can bring to bear, it takes 30 to 36 months. All these things can go wrong. There are suppliers to balance. There are logistics to balance. There are designs to balance. There are regulatory requirements, all of this stuff. Now, that's daunting for a small company like Tesla, but they delivered the Model S actually very slightly ahead of where they said they would, like a week or two ahead of where they said they would. They managed to execute. What that tells me, first of all, is that Tesla's on this stuff. And second of all, that they set very conservative targets, at least in terms of what they think they can do. So if he's saying, by the end of 2014, it's going to roll out in November or early December. It's not going to roll out on December 30th, the first one. Again, as you say, maybe they're not ramping it up. Maybe they've just, built 20 to deliver or something. But yeah, they're going to make that target.
I'm going to have to adjust these over-under numbers next time we do this. We were in agreement on all three of these. All right, John, thanks very much. Great show. Get to work reading some of those books behind you. So that is it, folks. We're out of gas. This ride's over. For John Rosevear, I'm Rex Moore. Thanks for joining us, and we'll see you again next week.